Good morning, everybody. This is David Price with the Price Group at Coldwell Banker, and we've got Lynnea MaKay with the Price Group. And today we've got John Fenech with Guaranteed Rate. And just a little bit of information on John. I've known John for, 17 years now, and he's been my kind of #1 go-to lender during my real estate career at Coldwell Banker. And over the years, I'd say probably 80% of my clients who get a mortgage use John, and couldn't be happier, and come back to him for refinances and new home purchases. So without further ado, let's jump in with some questions of kind of the state of the market now for financing, John. What can you tell us about the financing market right now?
Yeah, a lot of changes going on, but basically here at Guaranteed Rate Affinity, it's been business as usual as much as we can keep it that way. We've enacted some protection programs, if you will, for clients, and we've started a completely 100% human contactless process, from digital applications. On the start end, we have completely electronic signature programs, appraisals, appraisal waivers, where the appraisers can either do desktop appraisals. They can avoid going in to properties to avoid contact, and then we have our flash close program, which allows people to electronically sign about 80% of their documents prior to even showing up at the title company. And then our title partners have put together programs with us where we can do drive-by closings, if you will, just again to limit all contact. The programs that are available are pretty much the same, with the exception of some of the alternate type programs. But as far as FHA financing, VA, conventional loans, jumbo loans, we continue to do all those and have plenty of money to fund them.
So those programs, has anything changed in the qualification for any of these programs, or is it still FHA 3.5% down, finance 96.5%?
Yes, yeah, just to go through the list, David, on FHA loans, still 3.5% down, and the seller can pay up to 6% concessions on that. So a borrower, first-time buyer, or doesn't even have to be a first-time buyer, can get in with very little money out of pocket. VA loans, of course, for eligible veterans, offers 0 down program. And with 4% seller concessions, a veteran can literally get into a property with little or no money out of pocket. Great opportunities for that type of program. And the interest rates are in the upper 2s right now in VA loans, so it just makes for a great opportunity for somebody to get in now. And then conventional, we can do down to 3%. We can do 3% down payments with 3% seller concessions on those as well. So the programs are there, the products are there. They've tightened up on some of the credit scores a little bit recently, but again, we've got the products, and definitely with these interest rates right now, it's a great opportunity for buyers.
So
is it probably, oh, sorry, I just had a quick question.
Go ahead, Lynnea.
Do you think it's a good idea for people who are considering buying between now and in the next even year to go ahead and see where their credit's at, and what they can do to improve it if they need to, if they want to finance, in 6 months or 9 months or something like that, since the credit requirements have kind of changed?
Yeah, Lynnea, that's a great question. And I always encourage people, even if they're not ready, to go ahead and talk to a lender. And, we can pull credit. It's a tri-merged report. We can see if there's any issues. And if there are, we can start working on them now. As I always say too, cash is king. So I like to talk to borrowers and make sure that they're not going and using their valuable cash to maybe pay down credit cards or consolidate other debts, because a lot of cases it's more important to have that money sitting in the bank than using it to pay down or consolidate.
So that's kind of counterintuitive. What most people would think, that if they've got paid off credit cards and no debts, that they'd be in a better position. But that's not really the case at all.
Not the case. Is people getting their tax refunds. In a lot of time, cases, they'll take that money and pay off a lot of their debts. And if they're looking to buy a house in the near future, it's a lot better to keep that money in the bank. And if we have to consolidate, let's take a look at it first and see where we're at.
So to me, it looks like the market right now is ideal for people to refinance if they're in love with their house, and take advantage of some of these lower rates. And a lot of people that are renting, it seems like it's a great opportunity for them to jump into the real estate market right now, as rent prices have gotten so high over the last few years, at least in the city of St. Petersburg. I just showed a rental property, and the tenant is renting a one-bedroom condo in downtown St. Pete at $1,800 a month, and took a look at a two-bedroom, one-bath property to rent that was $1,550 a month. But he could have bought that same house that was a $250,000 house on an FHA loan with pretty much, 3.5% out of pocket, because he could have financed all of his closing costs and could have been paying less on a monthly basis than what he would be paying in rent for that same house.
You're absolutely right. And it's such a great time for renters who are looking to have home ownership to jump in now, because not only do you have rates that are record-setting low levels right now, we've got the programs that allow low down payments. And there are some down payment assistance programs available too. They have tightened the restrictions on those a bit recently. But here at GRA Lending, we also have our Give To program. So if a borrower can put together a little bit of a down payment on their own, we actually grant them an additional 2% to help with down payment or closing costs. And that's forgiven. That grant's forgiven over a certain period of time. So it gives renters, like you say, that are paying these big rental amounts the opportunity to enjoy home ownership.
Obviously, there's some concern in the market right now of what's going to happen with the real estate market once we come out of this COVID-19 situation. Is it going to remain hot like it has been for the past few years? Or are we going to have a dip? And, there's never a good time to buy or sell a house. You're either buying at a high point in the market, you're buying at a low point in the market. I think as long as you're planning on living in the house for a few years, or you're buying something that would be rentable, it doesn't really matter what the market does. Like, for example, you could buy a house for $250,000 today on an FHA loan, have a payment lower than rent, and decide in 3 years that you don't want to live in that house anymore, and you could turn it into a rental.
We've seen a lot of that going on, and especially with the more astute folks who are tapping the equity right now on homes that they've bought 3 to 5 years ago and using that for investment property purchases or second homes. Again, to be able to cash out and tap some of that equity, it's a great idea. But we've gone through the tech meltdown, we've gone through 9/11, we've gone through the oil spill out in the Gulf, the 2008 recession, and it still seems like real estate is our best investment. And like you say, there will be dips in the market, but overall, it's where people are making a lot of money and putting a roof over their head as well.
Right, some stability. And there's tax advantages to owning a house versus renting a property.
Yes, there are. The government has cut back on some of the top tax credits, but they're still out there. They're still available, and just through appreciation and building up that equity and building that nest egg through your real estate investments and your primary home is a great reason to do it right there.
So Lynnea, some of the buyers that you're working with and some of the sellers that you're working with, have you had conversations with them? Do they have any concerns? Do they have questions about the financing market right now? That
they're just concerned and wondering, asking lots of questions actually about what's going to happen next, and no one has a crystal ball to be able to say what's going to happen next. But I just always encourage them to reach out to their lender to talk to them about that and see if there are special programs out there available to them, especially people that I've sold to, I don't know, just even in the last year, have called and asked, like, so what's the story with the special programs for this COVID-19 crisis? And, who do I talk to, or where do I go to find out information about programs out there to do the forbearance that the government's talked about? So have people called you, John, that have asked that question, or probably more so their direct lender?
Yeah, the company has come out with information on that. I'll just read a brief paragraph here, but the Coronavirus Aid, Relief, and Economic Security Act signed by President Trump on March 27th provides help to borrowers with eligible mortgages who are experiencing a financial hardship that is due directly or indirectly to the COVID-19 national emergency. So all lenders, and GRA is a servicer, we service Fannie and Freddie loans. We do have these programs and steps in place for financial hardship caused by this. If you've lost work due to the pandemic, you're sick and can't work, you're caring for a sick family member and therefore can't work, or you've experienced the losses or significant decline in income due to the pandemic, are all reasons that you could enact this forbearance relief. So the forbearance relief has a few different forms of relief, if you will, including forbearance, mortgage forbearance up to 12 months, a prohibition on lenders or services charging additional fees or penalties, and a moratorium on lenders initiating foreclosure actions for 60 days up until at least May 17th of 2020. And then finally, a prohibition on lenders and servicers regarding delinquencies related to the forbearance to the credit bureaus. So, lenders, servicers are trying to go, above and beyond too, to help borrowers through, this period and to make it as easy as possible for them to get through it.
It seems that in 2008, when we had the financial crisis, through really 2011 or 12, when things started to recover, the government was very slow to react and pump in liquidity into the market to keep things moving. They've acted extremely fast over the last 30 days to kind of mitigate any long-term effects of this. It seems like they've spent a lot of money. What are we at today? Over $2 trillion injecting money into the markets to keep things flowing, which I think is great.
And the federal government will continue to do that as needed, David. It's a great point. They see the importance, and the president sees the importance of keeping the money flowing. And it all starts in the real estate and mortgage end here. And they've promised lenders that they're going to keep the money going so that we can continue to fund and keep the economy on track.
And I think that was the biggest. Go ahead, Lynnea.
I've seen where that has given a lot of confidence to buyers and sellers in the current market, because they see everything continuing to move and to go. And people are still requesting showings, people are still going out and seeing property, submitting contracts. Like it's all still moving. I think that gives people see that, and it gives them more confidence.
Lynnea, you're right there, and we've taken record volumes of loans in the past 30 days through this.
Yeah.
Not only, of course, refinances, because it's a great opportunity for people to take advantage of the lower rates, but also on purchases. A member of your team, the Price Group team, has been selling, I think, 2 or 3 contracts. I've been working with him this month alone on new sales that he's done. So great opportunity right now for home buyers.
Talking about refinancing, John, I got a call yesterday from a client who's been in their home for just 2 years. Interest rates have fallen since he purchased. And the question was, should we refinance our 30-year mortgage into a 15-year mortgage, make a slightly higher payment, and just get this thing paid down as quickly as possible? And my recommendation really is go back to your lender who you're comfortable with, which was the Merrills, they purchased their home through you. To reach out and get a new quote today and really understand the numbers to find out if the cost of the refinance is worth it in the long run. And there are a couple that are planning on being in their home for some time, that it may well make financial sense for them to recoup the refinancing costs over a period of time, especially if there's a significant saving on the interest rate.
Yeah, you're right, because a couple years ago, folks were paying 4.25% to 4.75% on the interest rates, and right now they can go to a new 30-year fixed at 3 to 3.25%, 15-year fixed at 2.5 for 2.75, significantly putting them in a better financial position. And like the couple that you just mentioned, I did an analysis for them, and if they plan on staying in the house for at least 2 or 3 years, they're ahead of the game and pocketing all that extra cash with the savings. So definitely worth looking into it. It takes me maybe 10 or 15 minutes to put something together for prospective refinance people, and I'd be happy to do so.
Great. So in the description at the bottom of this video, we're going to put contact information for John at Guaranteed Rate. So if you do want him to run some numbers, he can certainly do that for you and tell you what the best option is. And one of the things that I feel most comfortable with referring John to all of my clients is, if it makes financial sense to them, then he will encourage them to do it. If it doesn't make financial sense and they don't intend to stay in the home long enough to recoup those costs, John is not going to push you to do that. He is a very ethical guy, and I wouldn't be recommending him if he wasn't. So feel free to reach out to John. He'd be more than happy to run some numbers for you.
My pleasure.
Any other questions, Lynnea?
No, I think I am good. Thank you, John.
Yes, thanks, John, for the time today, and we'll connect back with you and get an update once we get through the coronavirus situation.
Sounds great. Good luck. Take care.
Cheers.